Welcome back everyone to the second episode of IPDA data ranges, and the demonstration which you see in front of your eyes is my example of August, the 1st of August, and how I used the 20 days, 40 days, 60 days look back, cast forward 20, 40 and 60 days. You would remember me mentioning in my previous video that we have finished the 40 days from the 1st of August, and we might see gold retracing a little bit. From here onwards, I have mentioned that we might see the political situation or the current affairs which are happening in the world. We might see a shift in that situation. We might see a ceasefire or truce, and something will happen which will drop the price down towards the equilibrium or towards the low of this price leg. You have to see this price leg right here. Okay, right here, this price leg. So now I am mentioning something which you have to listen up carefully, because it's really crucial to understand how important and how substantial the changes it might help you to understand the bias and the drawn liquidity and where you are in the price. All right, currently we are here, right here. Okay, suppose we are here. Gold saw an extreme level of manipulation towards the high, okay, in this range right here. Let me just drop it down a little bit. Okay, all right. So now where we are in price, just look at this range, just forget about these two. We are in extreme premium right here, and we swept the highs as well. So if I'll just go on a 4-hour time frame. Okay, so this is the high actually. Yep, beautiful. Look at the price delivering right after the finish of the 40 days. Right, Thursday starts right here. Thursday starts, we manipulate higher and then we drop down. Currently we are in a 4-hour FVG, which is looking at the retracement a little bit, but we might fall down. Let me just get back a little bit. Since we are in the premium, we are expecting lower prices. All right, but now this range has finished, this 40 days range. We are in the 60 days range from the month of August, 1st of August, correct? Now our 20-day high, it changes from here to the previous range is high. Instead of this place or this place, we use this 40 days to look back from the 60 days, meaning from here onwards we are looking at this high, and from here onwards, instead of looking at this low or this low, we are looking at this low. So this is our dealing range right now, and we are in the premium of dealing range. And you know what happens when you are in the premium of the dealing range? You have to look for sells. Of course you can look for buys short term, but overall the price wants to see lower prices, like lower delivery. Okay, and then what do we have? The 40 days high. This is the 40-day high, the previous 40-day high. From here, 40 days cast forward is this place, right? If I'll use this is 20 bars, this is 40 bars. Here, this is the measurement tool, right? So the highest high in this range is this one, and the lowest low in this range is this right here. So these zones are liquidity zones actually. All these zones which I'm forming over here are liquidity zones, where a lot of liquidity rests in terms of stop losses or buy or sell orders. Like I'm not talking about $1,000 order. I'm talking about the like big institutes, or algorithm seeks these liquidities right here. So make sure you're looking at this and then actually making a mark of it and understanding that this is the precursor which makes price deliver in its 4 phases, meaning the consolidation, the expansion, the retracement, and then the reversal. All these things are because of the IPDA data range, right? And if I'll show you how you can frame your trades in this, let me just go to the 4-hour time frame. Okay, over here, better yet, let me go to the 1-hour time frame where I can show you exactly. This is the 6 p.m. candle right here, this one. Okay, this is the quarterly shift. On the day of Tuesday, Wednesday, we saw this liquidity forming right here, right? Thursday began and we started to see price, meaning this Thursday is the last, the final day of the 40 days. We moved from here onwards bearish. You see, exactly in the third quarter, first quarter, second quarter, third quarter, we saw the final manipulation, meaning this is the final the breath for gold. This is where the institution bought so they can trap people, making them feel that gold will go much higher towards 3,000, whatever, 2,700, 800 institutional levels. But instead, time proved that this was the end, this is the exhaustion, and then we dropped, boom. Now this candle right here, this thick candle which formed in the third quarter, is our order block which will drop the prices down. Every time price taps in, it's gonna drop again. Taps in, drops again. Taps in, drops again. And let me show you something really interesting as well. Since Friday is closed, let me put a line over here. You're using IPDA, the higher time frame IPDA, to form your lower time frame idea and narrative, and then your bias, and then the idea of the entry. Okay, this is the Friday range as well. Now if you'll see, the quarter 1 we accumulated, quarter 2 manipulated, third quarter again came into where? The order block, 1-hour order block. Of course, if you'll go down a little bit, you might see this as a liquidity sweep, turtle soup, bam, dropped towards, I'll show you one more thing, dropped towards where? This was the 9 a.m. drop, right? This candle right here, 9 a.m. candle, it dropped. Where did it drop? If I'll go on a 4-hour time frame, right here, this FVG. When did this FVG form? Tuesday, 9 a.m. This FVG. When did the price fall down? Towards the FVG, 9 a.m. Exactly at 9 a.m. This is also 9 a.m. So you see, every single time frame and every single idea is giving us, the price is giving us its footprints. So time always proves to be the decision maker for price, where it will go. And this was the lesson which I wanted to let you know. Quick recap, 60 days, just give me 1 second. Let me just delete this. Okay, 60 days, 40 days, 20 days. Always look forward and look backwards. The highest highs of the previous 20 days, the lowest lows of the previous 20 days are your liquidity zones, either support or resistance, flip zones, or liquidity voids. Okay, from there onwards, you're gonna frame your bias. And that's it for today's video. And if you need anything else as well, do let me know in the comment section. And good luck and good trading.